Welcome back to another video, everyone. In this video, we are going to cover supply and demand zones. We are going to break down what are supply and demand zones, how do supply and demand zones help us, and supply and demand zones versus support and resistance. So first and foremost, what are supply and demand zones? So supply and demand zones are very similar to support and resistance like we covered in the previous lessons. Supply zone is an area where there's potentially more motivated sellers than buyers, known as a resistance area. So basically the sellers are more aggressive in the supply zone. You can see supply zone. What tends to happen in the supply zone, stock goes in, gets rejected, and it's harder for a stock to get above the supply zone. Not saying it can't get above it, but it makes it harder for a stock to get above that level, which is also known as resistance. Next, we have something called demand zone. This is an area where there's potentially more motivated buyers than sellers. So in the demand zone, we have potentially more motivated buyers. We have more aggressive buyers than sellers. This is known as the demand zone or a support area. What tends to happen here? There's more aggressive buying going on, and there's a higher probability of the stock going up from the demand zone, and it gets rejected from the supply zone known as resistance. Understanding where supply and demand zones are will give you an edge on your trading. These are extremely important zones or extremely important levels that we should always have on our stock charts. So this is an example. You can see stock Apple, demand zone, right? There's a lot of demand around this zone. You can see around this area there's demand. That's why the stock goes up. Goes up from there, goes up from there, goes up from there, goes up. The moment that demand zone, the moment the stock goes below that demand zone now becomes supply zone, known as resistance, right? You can see, starts off with resistance. Once that resistance gets broken, it's now support, known as demand zone. Once it goes below that, it is now supply zone, supply zone, supply zone, and now once it got above it, it is now demand zone. Same concept as support and resistance, right? You can see demand zone, supply zone, supply zone. Same exact concept. Right now, what is the difference between supply and demand versus support and resistance? Support and resistance levels and supply and demand zones are two trading concepts which are very closely related to one another. They each define points in the market where the price is likely to reverse, and they are both found to be forming on all over the charts. The main difference between the two is that supply and demand zones have a zone in which you can use to look for entries into trades. The support and resistance levels are simply lines which you can monitor for entries into trades. They're both the same concept, but the area is a little bit different. Now, what do I mean by the area? So we have levels and we have zones. As you can see from both images, both demand levels and zones share the same meaning. They are both used as a place of powerful support. You can see this is support level, support zone, right? It's the same concept. They're both areas of support or areas of demand. Now the only difference is that one zone takes much larger space, right, than the other line. Supply and demand traders use different approaches to this trading model, but in the end, they share the same market structure as people trading support and resistance. So the bottom line is they're both the same. It's the same concept. It's just applying them when you have demand zones, you kind of have an area, larger area. When you have a level, just one line. Now, which one is better? We'll get into that, but let's break down a few examples. If you look here, we have supply and demand zones. It's an area. Right now, the reason this is important is because when you have an area, right, you don't get caught up in a lot of false moves. Right? So what a lot of people would do, they would buy the stock here. I wouldn't buy it here, or I wouldn't look to buy it here because I know this is a supply zone. I know that there's a resistance around this area. Now, most people, when they're applying resistance, they would maybe have one line. When they have that one line, and let's say that one line gets broken, let's say I put the line right here. That line gets broken, they get in, and next thing you know, stock gets rejected. Same thing here. a lot of people would have support, right? Let's say a person has support, and the moment the stock gets a little bit below support, they're like, all right, it's time for me to buy. Let me get in. Let me get into the trade. Let me short. No, you want to have zones. Because if you have zones, you now know just because it went down a little bit does not mean it's going to keep going down. It needs to get out of this zone for me to make a trade. It needs to get out of this zone for me to get in the trade. You can see here, it gets out the zone for 1 day, and what happens right after? Boom, gets rejected. So these are zones, supply and demand zones. Right here, we have support and resistance. You can see we can have support and resistance. Now, I'm not saying pick which one you want to use. It's going to depend on what chart you're on, what the chart showcases. Here, we have clear-cut support and resistance levels. We have a line, right? Well, we can have a solid line. Around 1050, around 1040, we can have that level. Once that level gets broken, we can take the short position. But here, we can have a line. Here, we have a zone. We have a demand zone, which now turns into a supply zone, which now turns into a supply zone. Here we have a support level, or known as a demand area. When it gets broken, stock tends to go down. Now, if you notice, here we could have a line. We could have a line. Here we can't have a line. Same thing here. You can see the same line that worked as support, and failed, is now resistance, and works as support, You can see worked as support, resistance, resistance, resistance. Same concept. The zones are just a little bit larger, right? Now the problem with just support and resistance levels is this. The main problem with trading support and resistance levels is the fact that the market will often fail to turn exactly on the level itself. So what happens is if someone has this as support and they see the candle go below it a little bit, they're like, all right, let me get into the trade. Let me short. Let me exit. They panic. But the people that have an area, right, are like, okay, this is the area. There's demand at this area. In this zone, we have demand. So I needed to get out of this zone for me to get into the trade, right? A lot of the time, it will either move slightly beyond the level before reversing, or will just reverse before actually touching the level, right? Sometimes, as I mentioned, it will go below it. Sometimes it'll touch it and then start reversing, right? That's why having zones, depending on the stock, is very important. In this situation, I would personally have a zone. The zone would be much, much, much more effective than just having a critical line. You can see here, the people that just applied their critical line with Netflix would have maybe entered in here, or maybe entered in right there, right? Now the people that had a zone, probably like, you know what? I wanted to get away from this area. Why? Because I know around this area, there's a lot of aggressive sellers. Sellers are more motivated around this area than the buyers are. Boom. Now, that same person that was going to take the trade is now not going to take the trade because it's still in that zone. I would want this to get out of that zone for me to be a buyer. Now, what are some factors for finding supply and demand zones? There's 4 factors. Number 1, timely exits, strong force out the zone, order absorption, and spring formation. These are the 4 factors, right? Let's break them down. Number 1, timely exits. Good supply demand zones are somewhat narrow and do not hold too long, right? You don't want to see price spending too much time at the supply zone. So if this is supply zone, you don't want to see it you don't want to see the stock being around the supply zone a lot, right? You want to see it either get rejected or break through. Either get rejected or break through. You don't want to see price spending too much time. Is very, very important, right? Narrow and short accumulation zones followed by a strong move are more meaningful. So seeing something maybe like this or seeing something like this showcasing that this zone or this demand area or resistance area, whatever you want to call it, is now very, very important, because every time the price gets here or touches, look what happens. Look what happens. It either goes right through it or it has a tough time. So timely exits are the first thing. Next, strong force out of the zone. At one point, price leaves the zone and starts trending. A strong imbalance between buyers and sellers leads to strong and explosive price movements. The reason prices make huge moves up or down is because here there's a lot of supply. Go back. Right here, there's a lot of supply. Supply zone meaning resistance, right? The reason the stock is able to go through it very quickly is because there's a huge imbalance between the buyers and sellers. The buyers and sellers have an imbalance where supply, resistance, and then boom, demand kicks in, which drives the price up higher. The stronger the breakout, the better the zone is. So in this situation, you can see it gets rejected, strong force out of the zone. Gets rejected, strong force out of the zone, gets rejected, strong force out, and then boom, gets out of the zone here again. That showcases that this area is very strong. So I now care about this area. So if this stock was to come back into this area, I would heavily watch it and see what happens around there. Next, we have order absorption. Think of order absorption around a price level like a ball that bounces off a floor, right? Each time the ball hits the ground, some of the energy is absorbed by the floor. So it goes, the ball bounces. Each consecutive bounce will be lower than the previous one until all energy is gone and the ball comes into standstill, meaning that there is no more aggressive buying, that buyers are not aggressive. Now, if you look at this, this looks like one of our triangle patterns, right? This is a chart pattern that we're going to cover, known as a triangle pattern, which we're going to cover in the next upcoming chapter. But understanding this concept is very important. If a stock is hitting a similar support or demand area over and over again, you have to understand the idea that all the orders are getting absorbed. And once all the orders get absorbed after a certain point, there is a high probability it may keep going down. All right. And the last one we have is spring formation. This shows failed breakout or breakdown attempts, which is immediately reversed. Showcasing buyers and sellers are ready at those levels and react immediately. So basically, you can see stock goes right into supply zone, rejected. Right, goes right into demand zone, rejected. Supply zone, rejected. Right? It showcases that there's a lot of aggressive sellers or aggressive buyers sitting there that are immediately reacting to the price getting in that level. They're immediately reacting to the price getting in that level. So the moment the price gets in here, all of the supply gets flooded and the sellers step in and the market gets flooded with a lot of aggressive sellers, which is known as the supply zone or resistance. And you can see stock gets rejected. What happens here? Demand zone. A lot of buyers step in, right? Which is also known as support area or support zone. Buyers step in as soon as the price gets into this zone, and look what happens. Sellers again. Understanding supply and demand zones are extremely important, and also understanding that supply and demand zones and support and resistance are the same exact thing. Difference is the zones. Having these applied are extremely critical to trading. These two zones you should always have applied on your stock chart, and you should always know where the buyers are, where the sellers are, who's more aggressive at what point, and have these levels established at all times.